is going on, everybody? Welcome back to another video. I'm going to be chatting about some stocks and things that I've been buying recently. I wanted to discuss I guess depending on the point of view, but this to me is pretty great news. So Snap-on is one of the stocks that I'm really buying. I should have done more buying down here, but I thought it was going to go lower. So it didn't, and it shot up. So I did actually a lot of buying in this area, which I wasn't like too happy about, but it's not like terrible, whatever. But yesterday on earnings, it dropped like 10%, about maybe 9.5%. Now we're down to the 260s, almost in the high 250s, and it was just at 290. Huge discount on this stock, so I'm very happy buying it. I bought it yesterday on the way down, but you know the stock's not like $10; it's like 200 something. So I can't like pick up that many or justify doing so on the way down. So yeah, I really hope we hang around here for like a couple months so I can buy a lot more. I'm more happier in this area, but obviously if it goes lower, that'd be great. Obviously, so Snap-on is one of the stocks that I am buying. I'm gonna pull up this really quick. That should be good. Here is my breakdown of what's in the portfolio. Where are we? Snap-on. I just deleted it too. I wanted to see the percentage last time, but yet this percentage went up a lot. The portfolio, despite it dropping in price, the percentage of the stock in the portfolio has pretty much stayed stagnant or increased because the amount of, I guess, relatively the amount of shares I've been buying. So yeah, that's that. Intel is pretty much unchanged. It actually did drop a lot. I was up like 10 to 15% at one point. It did pull back. We'll check out the chart in a minute. Exxon, pretty standard, nothing really changed here. SCHD, I've been buying more, kind of less because at least the last month when we last discussed, because I've been buying mostly just Snap-on. Verizon, this actually moved up a lot in price. What is it right now? Right now it's at like $40. Yeah, it moved, which I'm happy. I'm still in the red a lot, but it's alright, I guess. Smith Weston, not too much to do on here. Walgreens still dragging my portfolio down. Oh, this is gonna bother me. Hold on, we gotta fix this. How do we do this again? Sort range. Let's do H. Simon Property, they actually just increased their dividend again by 5 more cents, so that is pretty sweet. Looking at like almost 6.7% yield. Again, I do wish I bought some more when it pulled back to like just above 100. I mean, this is hindsight. I thought we were gonna hang around the hundreds for a little longer. Then that's when I would have picked up some, but we did not. So, good. Ruger, I haven't really touched this at all. 3M, same thing. I just haven't. UPS, I did pick some up. It dropped off earnings a lot. The yield right now is, actually I think the yield right now is like 4.4, but when I did buy it, it was at the like support level, so just had to pick some up. I'm gonna be honest, I have not done enough due diligence on the stock. That's why you see we did not buy a lot, but I think it's a good enough company that fell to a pretty significant, I guess, technical support zone, but also I don't buy things on just the technicals. I think the company's pretty foundationally strong, so yeah, I just saw an opportunity, wanted just to take that. Have not added to this ETF, and Hasbro just still hanging out. I did get a kind of a little pop on this, almost like 10%, but I'm just hanging in there. Actually, I do want to look it up. Look at the chart. It's risky. It's definitely risky. But as it got to these levels, I think the risk became a lot more. What's the word I'm looking for? Like appropriate or understandable maybe. Going over the overview though, the yield on the dividend portfolio, not including bonds or anything, is about 3.45. So, excuse me, why am I so tired? I think ASMR just makes me tired. Hopefully it makes you relax too, but it makes me tired. I would like the dividend portfolio to be like 4%, but again, it depends on many variables like the market conditions and what things are selling at and the stocks in them, So, like Snap-on, I'm happy buying at, a little bit below 3%. I prefer to buy it above 3% yield, but it is what it is. That thing to me is super stable. Same thing with like SCHD, like from a dividend perspective, it's probably more understandable or reasonable to have a portfolio between like 3 to 3.5%, maybe even like 4% in that range. That you're not really going to get higher, unless if your portfolio is very mature, I guess is a better way to put it. Like if you've had this dividend portfolio or your dividend portfolio for like 10, 20 years, maybe probably like 20 years, and you haven't been adding as much, like it's pretty much assumed that you're not assumed, but your portfolio, I would theoretically, I'm trying to be not vague, but I'm trying to be all encompassing of everything. Your portfolio most likely has a higher yield because over time, hopefully, you've selected good enough companies that have raised and sustained the dividends, and obviously, you have not been adding as much into the account. So naturally, those yields would increase your starting yield. Or I guess not your starting yield, but whatever yield you've got it at from that point going forward is much higher, just based on time and companies raising the dividend. So yeah. That was long-winded. I forgot why we even started that conversation. But anyway, my portfolio right now, we're looking at a yield of like 3.5% about this dividend, or the portfolio breakdown right now is about 65% dividend stocks. I have nothing trading in a sense. Like, sure, maybe Hasbro or, excuse me, even like Smith & Wesson might be considered a trade, but like, and it's hard to say. Actually, I wonder if I should change that. I think we discussed this last week too. Is it a trade? Because the Smith & Wesson pops up to like $40 again, like I'm selling it. But anyway, they have a dividend. I'm classifying right now as dividend stock, so no technically trades. There's nothing that I bought with the intent of selling within like a year, because of time horizon, or like that being the sole factor. Everything I bought has a dividend, and I intend on keeping it until it either gets way too expensive or I want to move it to some other asset. ETFs are looking at about 12.5%. I do still have my Apple bonds that are expiring in a few months in May. I'm so excited for those to expire because they're just not yielding that much compared to other bonds and things. So excited for that to sell. Cash, we're looking at about 15%. I think it's like actually 14%. Did I update this? No, it should be like 41. I'm typing on the other monitor. It should be 13%. So anyway, so actually the breakdown should be this. Let me just get this over here. Did I miss one? Oh yeah, duh. Excuse me. This should be the actual breakdown. I didn't update this. And the yield is correct, okay. Actual breakdown. I do need to add some more money or more cash to this portfolio, so that's probably coming the end of the month or something somewhat close to that. Let's go back to the screen. So yeah, the last couple of days my portfolio dropped. I don't even know actually, but a good amount. I'll say that, just because of Snap-on and Intel, having this huge drop. Intel dropping 10%. Again, Intel is like 20% of the portfolio. So 10% of 20%, whatever that is. Or was it 2%? Actually, is that 2%? Probably. It's pretty significant. increase just based on like one, two stocks. Yeah, Intel though was cruising. Like Intel's almost been up 100% in like this past like year, so it's needed a drop. So I'm okay with it. Hopefully we don't continue too much. It didn't find this support though right here, but it seems like 42, like 25 somewhere around there's like a. I guess where it's finding the support. I don't know. We'll see what happens with that. Let's go to Hasbro. Yeah, Hasbro, like, they just dropped too much. I don't necessarily care to add more. I'm kind of just watching. If Hasbro drops, though, again, like $40, it's gonna be like, okay, maybe I should pick some up. Like, when does, like, we're back to, like, COVID levels. And I understand there's some fundamental things behind the company. Yeah, there's also the risk of cutting the dividend, and I've already been cut. My dividend's already been cut from Intel, from Walgreens, and Foot Locker. Speaking of Foot Locker, yeah, I'm not trying to get in another company. I'm not trying to heavily invest in another company with the potential that their dividend might get cut, especially in these interest rate environments. I do already own 3M, Verizon. What's the other one? Yeah, and Walgreens. All heavy amounts of debt. So, yeah. 3M had another terrible earning. Oh, they increased their dividend a cent. Wow. I gotta update my sheet. So now I'm getting an extra 4 cents on all my shares. I don't know. Why did they increase it? I think they know they had to, yeah, because it's their 4th year, right? Or their 4th quarter. Yeah, this was, yeah. Man, their dividend since COVID basically been increasing like 1% a year, so very, very slow. I mean, it's understandable, but I don't know. I don't like my money working here right now. CHD, I'm moving, but if I got nothing to buy, this is what I'm definitely buying. Just gonna snap on Simon Property ripping up here. We got that $1.95 dividend. Yeah, I was buying around here because I saw it breaking out, then it pulled back, and I was like, alright, let me wait till it at least consolidates. I don't know, it's like $100. And it did for, I guess, what is this? A month. So I mean, I technically did have a month where I could have bought between 100 and 105. But I thought I would have seen a little bit more down here, but it just, so, Smith and Weston is breaking out of a little bit of a pattern. So UPS, we kind of had this boom move in between the earnings, down like 25%, then it ripped up, then it dropped off earnings, and we have this support here, like 140. So I thought that was kind of a good entry point, at least, to pick up some shares. Yeah, we'll see. I obviously it's not a big position, but if we hang around this area, it might be tempting to pick up some more. But I worry if we do drop, like, technically the next support is like $100, so that, I'm sorry, I want to go to the 5-year. That could technically be like almost a 40% drop if we do find or re-find the support down here. That'd be 30%. If we get there, actually that would be a good, from a dividend perspective, but then we gotta see what's going on with the company. Walgreens is just a disappointment, and Exxon's not doing too much. Very tempting to potentially buy some more, but probably not. It's already a massive percentage of the portfolio. Been eyeing up J&J. Just again a good company, but technically, if we get down to this, I guess 150 zone and touch this support line, like this has been holding since the recession 2008, or I mean at least this trend line, I guess. So anything on the other side of this trend line could be considered, from my perspective and understanding, it might be okay to pick up some shares. We'll see though, because I mean I thought the same thing with Verizon. Verizon, these lines are all messed up when Schwab moved over to, or TD Ameritrade moved over to Schwab, so it's just anarchy. But I was following this grind line for like a while. Man, I gotta move all these drawings. And it just dropped. So that's 30% drop. And that's a big time horizon. So just because there's a grind line doesn't mean it's definitely going to hold it, but it definitely gives some technical indication that it might be getting somewhat cheap. Like Amgen was kind of one, like we had this massive, even like down here, it's just this support, rising support, and then, yeah, it rips up, but I wanted to mention something. Take-Two is getting clobbered today. Pepsi also, a little bit, they raised their dividend, or, yeah, I thought they raised their dividend, but I guess it's not in effect just yet. Microsoft, the last, like, almost year has just been straight up like 70%. Like, right now, let's see something. Microsoft is, I think, the biggest company at $3 trillion market cap. Does anybody understand how large that is? Every day, Microsoft moves up 1%. They move up $30 billion. Is it 30? Yeah, every 3%. 1 trillion is 1,000 billions. So 1% of 1,000 is 10. So 30. Every 1% Microsoft goes up $30 billion. It gets reevaluated $30 billion. I guess from this point today, obviously, like it's different. Tomorrow it'll be a little bit bigger. Assuming 1%, 1% of 1% is different. But again, to put into perspective, Snap-on is a $14 billion company. So if Microsoft moves up 1%, Snap-on, it's basically like Snap-on, what, not even doubling. Like it's as if Snap-on today doubled in value, and then doubled again. Yeah, so 4 times. I could be a little smart here. It's just interesting. It's just crazy. Like, I'm not saying it's a bad company. Again, it's obviously not. But is it worth that value? And can this company be reevaluated every day at that many billions based on the amount of money they're getting every quarter or year, month, whatever time horizon you want to use? I don't know. To me, that makes absolutely 0 sense. At least from like a valuation perspective. Apple's just under 3 trillion. Another news is Meta. Meta started paying a dividend, which was very shocking. The thing ripped up. Where's Meta? Yeah, Meta went up like 20%. They're paying a 50-cent dividend, which, I mean, is cool and all, but again, it's like, it's gonna be interesting because I don't consider these, even like Apple and Microsoft, they pay dividends, but I don't consider them a dividend stock in a sense because the yield is so low and the valuation is so high. But that doesn't mean that they can't ramp the dividend up based on how much, cash flow they're making. So, like, yeah, if you were to, yeah, it's hard to decide, like, how much, you can expect, let's say, Microsoft to increase their dividend, let's say 5-10% easily every year, maybe more, maybe, let's even say 20%. What are they actually doing now? I'm curious. But, like, it's like, how much do you want to bet on that today? On the amount, that dividend they're going to be increasing, if that makes sense. So, I mean, just quick math. From 2019 to today, dividend increased by, was that 50%? So 5 years, about 50% increase. It's just, I don't know, like, would you rather buy something like that's yielding, let's say 4%, let's say like UPS, just as an example, or, I mean, I guess okay example, UPS yielding 4.4%, where they might not be increasing the dividend that much. I mean, they still increased it about 60% in the same time horizon. Microsoft increased it, but again, that's just because you take the small time horizon doesn't necessarily mean it's gonna continue that way right today, right now, should I buy UPS for 0.4% or buy Microsoft, where it's yielding, what did I say it was? Okay, I don't know where. Microsoft, 0.72%. And like, let's say in 5 years from now, Microsoft dividend 100%. So now I'm getting 1.4% yield. Cool. But I'm still nowhere near 4% yield on UPS. But this is why investing is difficult, because it's hard to have a conversation, because every person's going to be different on what they value. And I mean, that's kind of the important part, or the significant part, and why it's important for every individual to have kind of their own reason for buying things. And yeah, I get off my soapbox, bros. Soapbox, that's what it is. What's target yield? I kind of wish I picked up a couple like shares or something to target down at these, just to support. Yeah, the yield right now is like 3%, but it was like almost 4. Okay. I don't know, but anyway, I guess getting back to the point of the video, I mean, I'm mostly buying Snap-on. Now at these levels, I'm super excited to be buying at least. I'm more happy to be buying. Still at these levels, the yield for Snap-on is not what I want. I want it to be at least 3%. It's at 2.8. I'm gonna be buying this as long as it's in these channels. This is what I've identified as like a perfect stock almost. It definitely got a little bit overvalued in these areas, 100%, and I still was buying because I am tired of buying. How do I put this? I'm tired of buying subpar stocks at decent valuations, only for them to be devalued even further. And I'm tired of seeing good companies and stocks that are at high valuations become even more expensive, and I missed that opportunity. I would rather buy a company at a somewhat, I guess, I'm not gonna say overvalued, but a valuation which I don't necessarily agree with, but is more than I wish it was. But everything else in the company, from a normal person or a retail investor's perspective, if that aligns with me, I would rather pay a little bit more and have the stock go down than not buy the company and have it go up and just not be a part of it at all. And that might sound like FOMO. Is that FOMO? I would say no. Because I'm okay buying at certain valuations. If it goes cheaper, good. If it goes higher, well, maybe I at least bought it when it was a little lower. But like things like Verizon and Walgreens, I had all these valuations and things. I'm like, wow, this company looks great at this price, blah blah blah. But you know, they got a lot of debt here. They're not like amazing in here, but the valuation's great. Oh, it turns out like there's so many things in my portfolio even now where the valuation seemed good and the valuation seemed great. The company seemed good to okay. And I decided to do that over companies that had higher valuations. Not that I like missed out, but I could have put more money in just the things that were good, like good assets. So yeah, that's just the reality of it. Like, there's a reason why all these high-paying or these dividend stocks that are pretty sustainable and consistent, that are somewhat safe, are valued a lot higher than other companies in the same sector, because they're good companies and people want to buy them. So you have to factor that into the equation, you know. And I mean, yeah, any day there could be some COVID type of event, black swan, where things drop immensely. That's why, I mean, at least I always have a certain percentage of money stored up, anywhere from like 15 to 20%, ready to go in case I gotta buy something. But like, I just hate buying things that I'd rather pay for something that's expensive, and then watch it ride up, then pay for something expensive, then then not pay for something at all, and watch it just continue to go up, and never get the entry. I mean, you can't do that with every stock or everything, but you can. Gotta be, I guess, somewhat intelligent. With not intelligence, the right word. Like, there's some strategy and risk tolerance. These videos, I think I kind of just end up rambling, but hopefully you guys find it relaxing, or at least somewhat entertaining or enjoyable, or at least makes you think about some things in a certain different way, maybe. But yeah. I'm just gonna quickly scan through my list and see if anything else pops up. Caterpillar, wow. Caterpillar's always so surprising. I think, yeah, Clorox moved this whole last quarter. Moved like 30 something percent. Disney, wait, no, where is it? Disney popped off earnings yesterday. I was really debating buying it these $80, but I just was like, I don't know if I cared enough. They've got their dividend back. I think that was kind of a dumb decision, but what do I know? JP Morgan. Wait, JP Morgan's at 170. Oh my gosh. I'm beating myself up for not picking it up at $100. It's a technical zone, it's a psychological zone, and the dividend at the time was 4% because they were paying $1. Yeah, that was kind of the zone to buy it, and I did not. I'm gonna look at the stag. What's stag doing? Yeah. Anyway, though, I think that's enough chatting for today's video. I don't think I have too much else to discuss. Yeah, but hopefully you enjoyed hanging out, chatting. If there's anything people want me to talk about, I mean, I obviously don't have any more wisdom than anybody else, but it's fun to at least, it's enjoyable to put it into this type of content creation, I guess is a good way to put it. Man, imagine buying, not imagine, but it was a different world back here. My friend bought some property, I think at $40, but he sold it when he like tripled his property at 40. He almost like tripled his money almost. I forgot, like 120, but anyway, if you had it at $40, even like $20, and you're getting let's just assume $2 dividend too for 8 on 20, 40% yield on your money. That's wild. Wild. That's where the big bucks are. That's where the big money's at. That's where the more risk, the more potential reward. But also, they could have went out of business. You never know. But if you did due diligence, you probably would have found that they were probably not. Anyway, enough rambling. Take care, everybody. Hopefully, you have a good rest of your day. We got other stock videos on the channel if you want to check them out. It's pretty much all we do on here: stocks and I guess other finance activities, but mostly stocks because I'm not like a financial expert, so I guess I'm not a stock expert either, but like, I at least think I could weasel my way around talking about it, so. Alright, take care everybody. Until next time, have a good one.